Good evening, folks. Sorry about a bit of a technical glitch there. Hopefully I've got everyone now. Good evening. It's Jeremy from Trading Safely. I've got Shaun Downey over in the UK. Shaun, can you hear me?
I can hear you. You hear me?
Shaun, are you there? Okay, well, probably lost Shaun. That was probably my fault. A few technical glitches. So tonight, guys, welcome. We're going to take about 45 minutes of your time. We're going to go through the Dow, gold. I think Shaun's here actually, but he can't hear me. We've had this problem before. That's a bit of a shame. Okay. Well, I'll tell you what, Shaun, given that you can hear me, I'm gonna do a markets update, and I'm going to hand it over to you to sort of run through. I'm going to pass the screen to you so you can present. So, apologies, everyone. So tonight, first of all, I'm just going to share screens. Just bear with me, everyone. Tonight will take about 45 minutes. We're going to cover over the major markets. Just bear with me. Okay, good. All right, so now I'm just going to share screen. Okay, so this webinar is for you if you're committed to changing your financial future. It's for you if you've bumped into a few indicators that just don't work, or you want to get expert opinion on global markets. Shaun and I have been in this game for a long, long time, particularly Shaun, 37 years covering all markets, and myself, about 15 years in particular, energy markets. Shaun's well known for his 2014 Book of the Year and well known in the professional circle. And I've made a lot of money out of Australia trading power. This webinar is for you if you want to get an unfair advantage over almost every other investor. And the reason I say that is because we trade multiple timeframes, and for our existing clients, they're starting to understand that advantage that software gives them. Tonight is certainly an opportunity for you to ask questions about any markets. Please put your hand up and just jump in the chat box and ask relevant questions on any markets you want to get an update on. You're definitely going to see cutting edge trading technology in action. If you are an experienced trader that wants to maybe get a new edge, you've come to the right place. And finally tonight, we will update you with how you can get involved. Shaun and I in trading. I touched on why you should listen to us. We've both been around the block. We've both traded for a long time. 50 years between us. So we're well placed to talk about markets. We are corporate authorised representatives with an Australian financial services licence holder, which means that we have to meet certain requirements before we can give general advice. And it is important actually that you do read this disclaimer. It's part of our licensing. That's why you do that. This is normally the point where I'd switch over to Shaun and let Shaun just have a bit of a chat about the market. But given that I can't hear Shaun, I'm just going to have a crack myself. So really this week, the major moves were, last week we said that the equities had a short-term overbought signal, and we expected the market to pull back a little bit, and that's exactly what happened across the Dow and S&P 500. Is overbought in time and price. We've had a very orderly correction. The Dow, for instance, pulled up at last month's close. There's nothing, closed the week above the lower weekly pivot. There's nothing disorderly about that. So it's still a bullish equities market. In terms of gold, we've been commenting on gold for some time now. Gold Gold has been pulling back from that sort of 1250 zone that we identified. Right now, it's more about time than price with gold. As we approach the end of the month and the quarter, we're going to be looking to see whether gold can hang on to the upper quarterly levels that will keep it bullish. Bonds, we mentioned last week, had taken out weekly downside levels and followed through this week. So we had bonds and equities heading lower this week. Interestingly enough, some of the currencies reversed on the close on Friday. We're going to cover those in due course. So I might just switch over now to a bit of a rundown in just major markets. And at some stage, I'll hand this presentation over to Shaun, but right now, I've just got the Euro US dollar here at the minute. And so for anyone new that's watching, what we've got here is our pivots that are available in Chart IQ, and the different colors represent different time frames. And the yellow is weekly, the pink is monthly, the brown is quarterly, and the blue is semi-annual, and the orange is annual. And what we're interested in is, well, you can think of like each of the colors as like a ladder, and where we close above that upper pivot at that particular time frame, then we're going up in that time frame. When we close in the middle, we're indifferent, and we close under, we're heading down in that time frame. And what's interesting is the relationship between all the pivots. So when a market is well organized, all the time frames will be within each other. So the weekly yellow pivots will be inside the pink monthly pivots. Pink monthly pivots will be inside the quarterly pivots, so on and so forth. But when markets move and get overextended, then what we see is that the pivots start moving outside of each other. And in fact, the more pivots that move outside of each other at the same time, that's what creates the energy for a market to move in the opposite direction very quickly, and we kind of refer to that as the slingshot. So now when I look at the Euro US dollar, and I come to the end of sort of 2016, we've got these long-term yearly pivots up here. So on the yearly basis, we closed, the last day of the year was right here. We closed in the middle. So where we have a close that's in the middle, we typically will just be deferring back to the previous year to get the overall trend. So if, like the year before had closed underneath, so if I actually do go back a year for the euro, I want to know where it closed. So the year before, that's where it closed at the end of 2015. And you can see at that point there was the upper pivot, and there was the lower pivot, and the euro closed under. So at the end of 2015, the market was actually had a bearish close. So a market is always bearish until it's bullish. And so this year the euro closed in the middle. So when it's neutral, but the year before was bearish, and it just retains the bearish bias. Now, the euro got quite oversold. And now, why do I say that? Because when these pivots start to move outside of each other, like here, these two pink lines moved outside of the quarterly pivots. That is an indication of a very overextended market, and that is exactly why we had this correction up. Now, what's interesting over the since the start of 2017, what do we know? Well, we know one, there's the lower quarterly pivot, and we closed underneath it, so it has a long-term bearish bias to it. But that is a quarterly time frame, folks. A quarterly time frame is a long time frame. A lot can happen. So if we zoom into the monthly time frame and come to the end of January, and look at this pink pivot, that's the pink upper pivot. So right on the last day there, we closed over it. So that's a warning. The market was overextended down here. These two pink pivots were underneath the lower quarterly pivot. We corrected up. And then at the end of February, right on the last day of the month, we actually closed above the lower pivot. So if the euro was truly weak, it probably should have closed under that level, and it didn't. So what it's basically saying at the moment, folks, is that although the euro does have a long-term downtrend in place, the last 2 months have given signals that the euro may not be going down and may in fact just be having more of a correction before the correction up before the long term resumes. So if we come to this week, like last Friday, for instance, we moved to these weekly pivots in yellow. So there's the upper pivot and there's the lower pivot. Well, guess what? Right on the close on Friday, we closed over the upper pivot. And, that's been a while since we've done that, 1, 2, 3, 4, 5 weeks. So to my mind, we are coming into the end of the quarter, and that's where the quarterly pivot comes into play. So we could just be testing this quarterly pivot. So if we get to the end of March and we happen to close under this 1.0738, then it's entirely feasible that this long-term downtrend over here just kicks back in and the euro keeps selling off. But the warning is clearly here for anyone that's been short to date. January closed above the upper pivot. February held the lower pivot. So there is fair warning that the euro doesn't want to go down just yet, and that's been compounded this week by a weekly close over that level. Now, I know if Shaun was here, he'd be interested in where the peaks are. So when I put the peaks on, for a true breakout to the upside, folks, we probably want to see like a close above this 1.909 level. So first things first, the market's taken out this weekly pivot. It looks like it wants to come up and test at least this zone here. And should the euro happen to close over this monthly pivot at 1.0758 at the end of March and take out this quarterly pivot, then there is a good chance it could move higher to test this annual pivot up here at 1.11. So be warned if you're short. It looks like it is moving a bit higher here at the moment, the euro. But don't forget, the longer term is still down on a yearly basis. So I'll now switch over to the Dow Jones. Dow just had a very orderly pullback, as I mentioned. I won't spend too much time on it. We're still looking for where we close in relation to the end of the quarter. If I look at the long term, Dow is on a monthly buy signal, it's on a quarterly buy signal, it's on a semi-annual buy signal, and it's on a yearly buy signal. So it's not something that you should be looking to sell. The only thing that would change my mind at the moment, here's the Dow. So once again, these monthly pivots are pink, these quarterly pivots are brown. We're up here. The market is overextended a bit by virtue of the fact that this monthly upper pivot has moved outside. So at this point here, you can see January and February, those pink pivots were inside the brown pivots, but now the monthly pivots have moved out. So this is a place where it can turn down, but the long-term trend is up. Now, the only thing that will sort of raise my eyebrows, and probably Shaun's as well, is if we happen to close under here at the end of March. Now, why do I say March? Because March is the next relevant time frame. It's going to be the end of the month, and it's also going to be the end of the quarter. So given that we are a bit overbought and we are above this quarterly pivot and we are above this, it would be a fair shot across the bow if the Dow closed underneath 2250 at the end of March. If it doesn't and it sort of holds this quarterly level, well, there's nothing stopping the Dow from just accelerating further up. The point I'm making is there's absolutely no reason to be short the Dow. It is on long-term buy signals across the board, across many time frames. So don't stand in front of the truck. Pullbacks are going to be a buy. If it does close under 2250 end of month, then you need to pay attention because you might get a deeper opportunity, which will be happy days, frankly. You might see a retest of one of these lower pivots. But really at the moment, we are on quarterly buy signals. If you're If you're worried about the long-term trend failing, you need a quarterly close under this level. Like a quarterly close under 18,990. Only then would you truly see a little bit of weakness at a higher time frame. So there's a lot of work before that can happen in time. So let's just stick to the next month and the next quarter. If this quarter holds, there's no reason the Dow can't go higher. So we just got to be patient there. Moving on to gold. Gold's been very well behaved from a pivot analysis basis. So for anyone new, okay, we'll start with the highest time frame. So right here, that was the end of 2016, and those orange ones, orange up and down, are the yearly levels. So we closed underneath that orange upper level, so we closed neutral for gold at the end of 2016. But what was the real standout was these quarterly pivots here. There's the upper one, there's the lower one, and we closed all the way down here. So we're really overextended on the downside on a quarterly basis. So much so that these two monthly lower pivots actually moved outside. So at this point here, you can see the two monthly pivots inside. That's a fairly orderly market, but when they move outside, that's a extreme market which can effectively show spring characteristics or spring energy. So oversold and create a slingshot out of there, and that's exactly what happened. And when we look at the monthly pivots, okay, so at the end of January, there's the upper pivot, or we closed above it, so the market went higher. And look at this, folks, like right on the last day, right on the last day of Feb, we closed under this upper pivot, and we were in a downtrend, don't forget, because we closed under this quarterly pivot, and the market has now resumed the long-term downtrend. Now, so what's next for gold? Well, time is next. That is always the answer, time. What is the end of the next period? Well, the end of the next period is the end of the next month. So March happens to be the end of a month and the end of a quarter. So a bit like the euro, gold is the same. It must, if it wants to be bullish against the trend, like if it truly has put in a long-term low, then it definitely needs to be closing above at least 1226.5 at the end of the quarter. Conversely, if the market closes under both the upper quarterly pivot here at 1226 and closes under the lower monthly pivot at 1210, then you're talking about opening up a big space to the downside where gold can put in a fairly vicious move lower. So right now, typically in these sort of situations, the market will, time will take over, and we're likely to see a move back up in to try and test this zone. So, if you're short from the high up here, there's still no reason to be out of that position because, look where we closed. We closed under the weekly lower pivot. You've got no reason to be getting out of that yet. We did have a daily buy signal, which is a bit of a warning. So, but if you're trading the weekly time frame, then you would just be waiting for the weekly close above this upper yellow pivot next week. So gold is definitely still on the weak side, and the next leg down will come, I think, the next major move will come once we know where we close at the end of the month and the end of the quarter. But right now, the broader downtrend seems to have resumed. So there's no reason, as of today, that gold can't go lower. Moving on to what else can we look at? Might have a look at oil. Oil had a pretty big move down, but in the scheme of things, really hasn't done that much. When you look at the big picture with oil, Oil actually closed bullish last year. Markets can do this. They can close the end of a particular year. There's the upper yearly pivot. There's the lower yearly pivot. It closed the year above the upper pivot. A long term, that says oil is bullish until it isn't. That's the only information you have. Don't forget that a yearly time frame, there's a lot that can happen in a year. It can move all the way down to the lower pivot and then still come out and be bullish at the end of the year. So to me, a long-term signal just gives me the direction that I want to be trading. So I'm not trying to sell a market that's got a long-term trend. I'd rather be waiting to buy oil than sell it until the market tells me that it's in a long-term downtrend. And at the moment, I don't even have a quarterly downtrend. We closed last quarter above that quarterly upper pivot. So why would I want to be selling into an uptrend? I'd rather take my chances from the long side. So to my mind, it's probably just having a crack at this 45 level coming into the end of the quarter. Time is the important consideration here. So I'll be interested if oil actually holds this lower quarterly pivot at 45 and doesn't close under it, and then takes out one of these, when these yellow weekly pivots move lower. Let's say at the end of the month they're down here, and then we take out that upper yellow pivot. I'd be interested then in getting involved, but I'm not a seller at the moment, because if you look at history, it's saying that the trend should be up. So until that trend tells me it's going the other way, I've got no choice but to come from the long side. So I'm just have to wait with oil. Maybe on the bonds quickly. So there's 30-year treasuries. Broke down during the week, had a extended sideways period of just oscillating between the pivots. They had a big breakdown last year and got super oversold. So much so. Look, here's the end of 2016. There's the quarterly pivots there, and look at these two monthly pivots. They're right down here. They're miles away. So that's like super oversold, folks. You don't get much more oversold than that when you get the two monthly pivots completely outside the quarterly pivots here. So we've had a corrective phase as a result, but the longer term trend is down because we closed under this quarterly pivot, and it looks to have been re-engaging. Last week we took out that lower weekly pivot, and it's just been on a sell since. So the next major level for the Treasury bonds is down here at the end of March. Needs to hang on to this 144 level, otherwise the probability of that market is down. I think they're probably the major markets that I'll talk to tonight. I might just come back and try and hand a conversation over to Shaun and let Shaun present to everyone. So I'll stop presenting. I'm going to hand this over to Shaun. So Shaun, I think it's over to you. So I'm just going to stop. Shaun, there you go. Now, I think, Shaun, all you need to do is click on your own share screen and you're away. So I'll just hand it over to you. There we go. Okay. I can see your screen now, Shaun. So over to you. I'll be quiet.
Okay. All right. A couple of things that I spoke about last week. The first one was about something a lot of people don't really look at. It was the short-term interest rates in Europe. And it had the biggest one-day move in over a year at the end of the previous week. And the question was, did that mean something? And later on in the week, we had the ECB on Thursday, Draghi having his normal press conference. And you can see there, we've got the supports and resistance lines, that on Thursday with Draghi, we broke what was the final support. So this market we've had pretty much zero interest rates forever, so it doesn't really do very much. And then suddenly he was a little bit hawkish. He was talking about ending tapering or something. I won't get too technical about it, but the bottom line is it's broken out. And I spoke about last week about whether it was for real, then this would give the euro currency some sort of bid, and that's very much happened. So Jeremy's already touched on that. Now in the short term, there's a shift in sentiment. So Euribor has broken down. I'm watching it pretty closely, and there could be a big shift in interest rate, what people think is going to happen moving forward. So the euro looks like it could be bid for a while. I still agree with Jeremy that it's a bigger counter trend move, so we can go up to somewhere where it'd be very nice to get short again, but we're not there yet. The other one for me was crude oil, and we did get our inner circle on this pretty quick, in that crude has been sideways for most of the year, and longer term we are bullish, but the chart tells us we don't tell the chart, so we're waiting for it. And then suddenly on Wednesday, you can see that price broke. I just draw a circle here. It broke this weekly support, so I'm using CQG today, and it opened up space for it to come down to its next level at 46.05. We've also got that quarterly pivot, I think, at 45.50, and we've got a monthly support at 44.97. So it sort of opened up the downside all of a sudden. The funds are very, very long. It's got the record open interest in oil, so there's a lot of people involved, and it's broken down. Now, you would have thought, we've talked about airlines before, and you would have thought that the oil price breaking down and possibly dropping, the best part of 10 to 15% pretty quickly, that would have be an instant benefit to airlines. Now, we've talked about airlines being loved and waiting for them to fall, and if you look at them, this is United Airlines. The price is actually down slightly from where it was on Tuesday. So oil price dropping doesn't appear giving any particular benefit to airline stocks, and that's a great example of fashion and unfashionable. And so it was loved earlier on in the year, and now it doesn't really matter. And this is Delta Airlines. See that there were signals near the highs there, and it's broken down to a certain extent, not getting any love at all. So airlines are interesting. The other thing spoke about was how we talk about market leaders. This screen's probably a little bit difficult to see, and there's no way I can expand it, unfortunately. But this is where I look at sectors and what's happening on the weekly basis. And something else has to take over. So banks have been in charge. Bank Super Regional is still number 2. It was number 1 last week. But the banks have been drifting off, and we've talked about, I put a note out, we had a lot of slam dunk signals in banks. So banks broke out. If I just take an example, I think Key was one of them, where we had what's called a blow off top. So the price went storming upwards, gapped higher in some instances, and then reversed back down. So we had a breakout, and then it reversed back down, and we're back in the sideways, and a lot of those stocks are doing it. So banks are not loved anymore. So we're looking for sell signals in banks, and anything that comes along. The one that's already on our radar is WAFD, which is Washington, I think, Bank. And it's not doing, you can see it's just been drifting lower. Moved its weekly and its monthly lines to the top of the trend from all the way down here. So from here up to here, and now it's drifting downwards. So going back to sectors, a little bit off subject there, what's taking over? Something else has to drive the whole market upwards. And so I'm looking at the changes within sectors to see what's happening. And what's happened is electrical semiconductor equipment has jumped to number 1. So it was number 6 last week. It was number 37 3 months ago. So semiconductors are now leading the charge. And there's a couple of other big jumps there. And the one that really stood out was biotech. So that's now sitting at number 8. It was number 17 last week, and it was number 48 3 months ago. Now, one of the background stories there is that I remember Trump saying, paying too much for drugs, it's outrageous, blah, blah, blah. I'm going to clamp down on it. And so that sounds like a really bearish thing for biotechs, whether they're developing drugs or they actually sell them. And here we go. Biotech suddenly loved again. And this was one of the things that led the market higher through 2013, 14, and into 2015 as well. And so while there seems to be some sort of fundamental argument that suggests that biotech shouldn't be bullish, for whatever reason it is. Now, there's a couple of ETFs on biotech. The main one is called IBB, so it's an iShares NASDAQ Biotechnology. And if I just scroll back, there you go. Let's go back a fair way. Just show you that rally. How far this market just went up and up and up. Yeah. So it's just pretty stunning, really. And now if I go back to today, it's been going sideways for the best part of a year. So it's been doing very, very little. And what's happening is we're coming right up to the top of the trend. So biotech is loved, but all we're doing is coming up to the top of the sideways pattern. We can see that there's a few times that it's failed there in the past. So this is something very, very important to watch. So if we had a weekly close above 302, that would open up the upside of biotech, and I would assume that biotech would lead the market higher. That's particularly NASDAQ friendly. There's some very big stocks, market cap stocks in the NASDAQ that are biotechs. And the NASDAQ still has no resistance. So whereas we've seen the E-mini and the Dow sort of overextended and create a few resistance levels, that hasn't happened on the NASDAQ. The other biotech that's there is XBI. And looks a very similar chart, but it has a completely different price. But what's interesting here is the mix is slightly different from what IBB is, and you can see we've been going sideways, but look, it's actually broke out above that final resistance, came back to it on Tuesday, pretty much by the look of it to the tick. Actually, it went, the level was 69.21, the low on the day was 69.19, so it went 2 ticks below, and now it's going back up again. So it seems to me that biotech is looking like it's going to be the one that leads the way. So keeping a close eye on that. Just a word for investors and trading safely on biotech. Generally, it's not something that we trade as individual stocks. There's too many potentials for price shocks. If they're developing drugs, then things can go wrong or things can go right. It's also an area where there's quite a lot of takeovers. So it's something where on the individual stocks, I would urge caution. However, if you're, that's one of the reasons for ETFs. It's going to smooth that sort of thing out. So it's possible that people can get involved in the ETF. The other one that had jumped significantly was medical systems and equipment. So keeping an eye on that. Again, there's plenty of stocks in there. There's about 59. So the whole merry-go-round, as it were, is beginning to change, having stayed the same for quite a long time. If I go to the bottom, so just switch this round, and not a lot has changed at the bottom. So retail department stores, things like Sears, Macy's, doing pretty badly. Apparel and clothing is still languishing down at 194. That is on our watch list, but there's nothing really, anything coming up at the moment. So the ones at the bottom haven't really changed. Just doing some stuff on some individual stocks. VRTS is something that had a signal a few weeks ago and hadn't really been doing anything. You can see where we've broken down. Trade safely, we gave us a signal in there. It's been going sideways, but actually on Thursday and Friday, it's finally looking as though it's starting to break. So that one remains valid. MCS is another one. A more recent signal. Still got some work to do. There is some supports below it. One that's been very, very volatile is Signet. So this broke down and then reversed sharply on Thursday. So you can see where we had the breakdown. Just move that up a shade. Then suddenly exploded higher, but it stopped at the resistance point and then closed back down again. And actually its performance on Friday, considering what the market did, was actually pretty poor. So keeping a close eye on that one. If it could well hit the trailing safety stop if it carries back up. Just thinking if there's anything else that's particularly of interest. No, I think that's probably it. Plus, we've been going for 40 minutes.
Shaun, I'm back on board now, man. I can hear you.
Okay. All right. Well, I was just finishing up there. I think the things that I'm looking for is the oil to continue its slide, the lack of a bounce in airlines. Bond markets are also looking a little bit dicey as well. Just one thing, we did very briefly at the end of last week just touch on soybeans, which I know is something that most people don't get involved in. But something has happened that is significant. I'm just going to put on CQG, they're called splits because it's a custom study. It's your time area 1 and 2 on Chart IQ and Technician. And what has happened is the final levels of support, which were semi-annual and annual, on both studies were exactly the same price, which was 10.16, so which I'm showing here. And we closed below it on Friday. So this is a red line that's only used by professional traders, which is a daily line, so it's not particularly significant. 974 is, because that's a weekly and a monthly line, and that's another 30 big figures away. So the soybeans have broken down. The funds are pretty long soybeans, so a little bit like crude. There's a lot. The funds are on one side, and it happens to be the wrong side, so you could get some liquidation breaking, some more weakness in beans. Question then is, if you're going to get an extended trend, they'll actually have to go and get short. So that's something that would take a few weeks for it to happen. The other thing here is corn. So just grains in general. It's got a final level at 358 again on both of them, and we're a little bit above that. We're at 364. But if we close below 358 next week, there is no support. It's disappeared. Corn is pretty cheap, but we've had good crops in South America, and it's a while before anything's going to happen in the US. So I think that's it from me. So I'll just pass you back.
Nice. All right, guys. Well, I'm just gonna stick a link in the box there. If you do want to get involved, there is a link there where it's a free trial. So please just follow that mytradingbuddy.com link, and there is a free trial that you can get involved with. Just to finish off, I'm just going to share my screen. So bear with me. Here we go. I just want to finish off for all the folks in Australia. Let's have a quick look at the All Odds, which is our cash index. So really the summary there is it's on yearly and quarterly and semi-annual buy signal, so it does currently have a bullish outlook. To keep the immediate trend going in the near future, you would like to see all odds close above 58.82 at the end of March. In terms of major levels to take out, there's still that one up there at 59.63. So
you need to share your screen.
I beg your pardon. I'm just going to. I thought I'd done that. Okay. Can you see that, Shaun?
Yeah, that's fine.
Okay, fine. So I'll just remove the piece again. Sorry, I'll start over. So here is the end of 2016. Remember that the orange pivot is the yearly one. That's the upper one. The lower one is all the way down here. So we closed the year bullish on a yearly, quarterly, semi-annual, and monthly basis. So there is a bullish bias to the Aussie market at the moment. We would like to see it, as I said, above 58.82. That's a double level there, so it's doubly powerful. The month is coinciding with the quarter, so we really do need to see the Aussie market over this 58.82 level pretty soon. Otherwise, it potentially could stall. And the major long-term peak up there is 59.63. So if we get a close above that on a monthly basis, then you're probably looking at the All Ords breaking out. But one time frame at a time. Let's just see if we can get above here at the end of the month. 58.82 is the level. All right, we're going to wrap it up there. Thanks very much, everyone, for joining us tonight. Thank you, Shaun, as always, for getting up on your Sunday morning and devoting some time to our clients. If you do want to get involved, please click on that link. There's a 14-day trial there. We do offer a Facebook community site that's quite heavily used up here. It's like an online site where we're constantly adding videos and charts and updating on global markets so that you never miss a beat. We do have a software program here that gives you all the levels that we use, and we've got some exciting opportunities at the moment, exciting developments of the programming that we're doing, and we can make it as simple or as complicated as you like, but if you just want signals, we can offer those to you as well. So we do have a YouTube site that tracks a lot of our output. We've got our online community site that is a private group, and we obviously have our website here where you can get involved, tradingsafety.com.au. Check it out. And so yeah, looks like should be an interesting week. Euro pushing higher. Interested to see if the Dow didn't close under that lower weekly level. It held the monthly close, so no reason it can't sort of test higher. It'll be interesting to see. Shaun, any last final words?
I think the euro, actually. I think our short-term interest rates and what I was saying there, and whether the euro breaks up. And remember that short euro is a very crowded trade, so we could get a pretty sharp move. So gold in dollar terms probably get a boost. So these things are all connected. So watching the euro pretty closely. I remember last week I said that because we had a buy signal the Friday before, and said, well, it depends what it does on the Monday, and it didn't follow through. And we came all the way back down again. I only to get another signal on the Thursday after Draghi spoke. So I think the euro is pretty important.
Yeah, sitting on a weekly buy signal. Buy signal now.
I think that's important. Expect oil to probably continue down to those levels. If it can get down there, then extremely interested down there. Let's be keeping a close eye on that one. So euro and oil, I think, and biotech. So IBB, if IBB can follow what XBI is doing, then that's the next market leader.
Yep. Good stuff. All right, Shaun, thank you very much once again for all your insights to markets, and hope everyone got a lot out of that, and we'll see you on next week's webinar.
Okay, bye-bye, everyone.
Yeah, so don't forget to click on the link, guys, if you want to get involved. It's in the chat box. We'll speak to you next week.